Welcome to Copper's latest opening bell report. Today, we're diving into the fascinating relationship between Bitcoin's price and ETF inflows, a trend that's been remarkably consistent since early 2024. So, let's set the stage. Since the start of last year, Bitcoin's price has been tracking a pretty linear path with respect to ETF inflows. Here's what that means. For every 10,000 BTC added to ETF holdings, Bitcoin's price has gone up by about 2%. That pattern, first highlighted by our research team last year, is still holding strong. Let's look at the numbers. Since Bitcoin broke through the $100,000 mark back in December 2024, ETF managed balances have grown by more than 100,000 BTC. That's a 10% increase. And right now, with Bitcoin trading at $110,000, we're seeing a perfect continuation of this model-consistent trajectory. Now, of course, there's always short-term volatility. Every time we hit a new 10,000 BTC inflow threshold, prices get a little choppy. But what's interesting is that since the launch of spot ETFs in January 2024, prices have consistently reverted toward this ETF-driven mean. That gives us a way to estimate how much capital it might take to reach the next big milestones. So, what would it take to get to $150,000? Based on the current model, we'd need another 160,000 BTC in ETF inflows. That's roughly $20 billion in net buying. And to hit $200,000, we're talking about 310,000 more BTC, or about $45 billion in new demand. These are massive numbers. For context, ETF inflows since launch are approaching that $45 billion mark, but they haven't quite crossed it yet. If they do, Bitcoin would actually become more valuable than Microsoft. But let's talk volatility. Right now, Bitcoin's 30-day volatility is pretty low, which suggests calm. But remember, volatility is a backward-looking indicator. It's really just an echo of past moves. If history is any guide, volatility could be coming back. Which way will it break? Well, ETF flows are holding steady, which is a positive sign. But we're not out of the woods yet. Macro headwinds are still in play. The US is still negotiating trade tariffs with the EU and other countries. And of course, there's the ever-present question of Fed rates. One thing to remember about Bitcoin, it loves to test our patience. Historically, it takes multiple failed breakouts, sometimes more than a dozen, before Bitcoin holds above a key threshold. But recently, we've seen Bitcoin climb past $80,000, $90,000, and $100,000 with surprisingly few pullbacks. That's a break from the usual pattern, and it could be a warning sign. If history repeats, we might see a dip below $100,000. Not as a sign of weakness, but as Bitcoin doing what it always does before moving higher. Since January 2024, Bitcoin wallet data shows a 284,000 BTC increase in holdings, almost exactly matching the 280,000 BTC newly mined during that period. ETFs and treasuries have added over 1 million BTC combined, but total balances have barely budged. So, what's going on? It looks like what we're seeing as demand could just be a reshuffling of coins. They didn't flood into the market, they were just recategorized. ETFs might be dominating the headlines, but underneath it all, the market's net demand looks flat. Right now, Bitcoin's growth story might be more about optics than actual accumulation. Thanks for tuning in to Copper's opening bell. For more detailed information, don't forget to download our full report. See you next time.